little bit. Been a little bit. Cool. I should be able to hear me. So we should be good for this morning. Hell yeah. Yeah, thanks, fellas. I am feeling better. Hella better. That was terrible those 2 nights. I don't know what it was. I think it was food poisoning. Either that or like a flu bug, but your boy was struggling. Oh, not the Rona. Sickness season, apparently. Where we at here? Oh, got a 5-second. Chill out. Zoom out. So higher time frame wise, we really are. What's this? Oh, okay. This was from yesterday. So it's kind of following price yesterday. Just trying to spot some turtle soups. Got a few that was nice. This would have been clean. Didn't take any. Was actually trying to take this one. Didn't take that either, but just expecting higher prices still. So this was a buy side objective that we had targeted. We've hit that. New day opening gap. Let's go to a 15. So notice, right, this is that 4-hour fair value gap. We were playing around. We've gotten above it. Let's go to a 4-hour. We find support or resistance first. We've pushed up and through it after holding this discount volume imbalance here. Close above, come back in to find support. So we would expect really a continuation. Honestly, that's what I would see. We may come back into that 4-hour, but I still like higher prices. So we have this here, which is now another daily swing point. And so that swing point should be good for now. If we start accelerating, we'll move it. For now, we leave that there as buy side. Let's see, we've closed above that. Closing above it. That's kind of more of a market structure shift in my eyes. Whoa, buddy said syphilis. I'm pissed. Said just disgusting. Kind of like, let's see, because we've cleared buy side in a way already. Previous day high. Let's go to 1 minute. So there's that buy side, previous day high. I still like that we have these equal highs here, but we're going lower right now. So we may want to, all right, we have that buy side. 930 though, we may actually see another run lower. So if we want to create a Judas swing, we have equal lows at this low, so this low probably wants to get ran. And then this is that 1-hour fair value gap. Notice how the midnight level is kind of inside that. And there's actually a sell side pull sitting right above that. So I'm looking at this sell side. I want to see if this sell side here gets interacted with. And if not, at least this low. Which we didn't get that low. And Q took it the low. Well, not market structure shift. That's buy side. Okay, if that would have cleared this low, I would like this to run straight into buy side. Equal lows don't have to get ran, so I don't want to get trapped in that thought. Let's see what we get here. Yeah, we'll probably just keep running, to be honest. Leave those for now. Previous day high at least. I'm looking at this BPR here. You might notice I'm saying that because we have this original volume imbalance. But we're pushing right up through premium, so it makes me think we may want to come for that. The volume imbalance respects perfectly. Fair value gap created as we get up and through it. Now on the way back underneath it, another. Right, that's all the same range right here. Look how we stop right inside that. High, low, higher, high here. Broken. Opposing buy side though, so we would see if that breaker truly wants to hold or not. I like that's here, right? See where all this is overlapping. That's what I'm saying. This range right here in price is balanced. And notice where we stop exactly to the tick on that first run. Hesitating now. NQ near its high. Which I feel like NQ and NQ cleared the low as well. Let's see what we do right here. Bearish volume imbalance, okay. Bullish fair value gap. So I want to see how these two PD arrays interact with one another. On a 2-minute sense, we actually have a little deeper fair value gap here. But I'm looking on a 1-minute chart with this wick like that. I actually wouldn't expect deeper than that. Like, let's say we want to go for this high. I kind of would expect this fair value gap here to hold and actually not return into this lower one here. Even though there is that 2-minute, right? The wick is still part of it, so I kind of would expect just an institutional order flow entry on that wick or on this wick here. That bearish volume imbalance did stay open, which less than ideal. Still holding the fair value gap though. Low, high, lower, low. Broken. You could use this high as well, right? Kind of the same one. If we were to go like that, really the same breaker. But this is kind of nice because it's actually consecutive up close, which is why I would look at this one here. So it's 3 straight up close candles and there's a volume imbalance there. Look how it's aligned with the fair value gap. Yeah, we'll see if we get underneath that. So we have consequent encroachment, breaker low. Through that, like if we did come back into this 1-minute fair value gap here, I would feel more like we want to come back for lows rather than bounce. Let's see, inside the 2 minute, we're going to move this, keep it a little less clustered. Let me December price action. So we got underneath that, back in it the first time. We'll see if that becomes an inversion, especially because we left the volume imbalance open. If we want to see higher prices, this candle would need to overtake it. Really on this candle, right? That one candle we talk about. To where I don't like that we break through that fair value gap. We are holding still the breaker bearishly. Never broke the bullish though. And we're actually holding, right? So if I pull up that bullish again, just to show where it's at. Bullish breaker. The consequent encroachment is also aligned with untouched volume imbalance. Nice. So we actually like that. That's cool. So we should see if we can now accelerate. With the fact that we created that bullish volume imbalance, I would have preferred that stayed open because this is that bearish fair value gap. We run into it the first time, resistance. If we could have got above that, that would have offered us a good support into the buy side. We still have a chance need for the actual candle to close. But so far, I don't like how we didn't attempt to even go higher, right? So it's that volume imbalance that gets created with a bearish kind of over closing of that, right? No wick higher at all. What we would want to see is this fair value gap, this reclaimed fair value gap here, offer a support again for the breaker to keep holding and for us to get above. Because notice how we actually never close above. This candle closes on the high. This is opening, so we don't count it as a close above the fair value gap, which means that we haven't necessarily confirmed that we can get above this here, this level, right? Previous day high as well. So pretty key area, which is why we are running just into that consolidation. We're going to move the bearish breaker at this point. Looking at that fair value gap paired with the volume imbalance like this. At this point, this low, I wouldn't want to see really broken if we were going to expand into buy side. Here first and then here. And that, okay, so close above finally. Now we can use it as support. As we mentioned, in this fair value gap, want that to stay open. So list low, want that to remain protected, especially holding consequent encroachment of that breaker. Wouldn't want to see anything less than that. Let's go like this. We understand this volume imbalance is also consequent encroachment of the breaker. So just need one level. We find support there again, which was nice. We would want to see. First closure above. Would want to see now support being offered, not really overtaking, right? Because at this point, we're kind of going back and forth through the PD array. That's not what we like to see. Still holding this 2 minute. I wonder what the consequent encroachment there looks like. Perfect. So yeah, honestly, for me, I'd want that low to hold. We hit the 2 minute. We did clear these highs. So now we're kind of running into an issue where if we're going to consolidate for a bit, we got to look at the opposing PD arrays. As we often say, highest premiums before the actual liquidity target. So that's external range here and here. If we're going to consolidate, these highest premiums will hold price. Right, so this volume imbalance, fair value gap here. Volume imbalance here farther to the left. $30. Yeah, still favor higher. NQ trying to get higher. Let's see, NQ did not clear its high yet. Cool. It's 718 high, still intact. ES on the other hand has cleared that high. But we should get up into that, right? I like that. We're still finding support now at the reclaimed fair value gap with the bodies. Wicks can go lower, that's fine. Bodies tell story. Expansion, there it is. Cool, so I was long in here. I'm out right now on that candle. As we pushed right up and through that buy side. Trying to see if we leave a fair value gap there. As we go up and through that. It's like we said, we left these equal lows. They don't have to be targeted. We didn't want to get trapped in that idea of thinking that. We break above this high, this swing point. We put in the YouTube model. A short-term low cleared, broken through with the high. So I'll label that. I'm looking, this is our short-term low. This is our swing high. So we break through that fair value gap. We did leave this little fair value gap here, but I want to see this left open. Right? We wouldn't expect this to be refilled. Because when we wick like this, so when we create the wick and then overtake that wick, wicks are gaps, okay? So this really becomes that gap I'm looking at. That we shouldn't break any lower than this. And do you notice something interesting? Consequent encroachment of that gap, the wick, is also constant encroachment of the breaker. Wow. Paired with the volume imbalance. Right, so you're seeing all these PD arrays aligned in here that make me confident to trust that when we trade back into that, we can go long. Stop underneath, right here. This fair value gap, this fair value gap has no need to be returned into. So I'm not worried about having my stop inside of that. It's right under this candle. In the buy side, we close it. Close on this one. We actually could have got into the external range buy side, but that's fine. So either way, same thing. But that plays out nice. Right? So as we kind of get back above all of these PD arrays, we expect them to act as support. Breaker block, YouTube model setup. Holds nicely. Slight hesitation, as we mentioned, at these premiums. We would expect that. But we end up getting through that buy side. And then slight retracement. Notice that. I'd want to see this fair value gap under this fair value gap, creating an inversion. Maybe we come back for lows now and attack the equal lows that were left behind. NQ has also cleared its high, so we're synced up in that aspect. But so far, not bad. Not a bad start. Thank you, brother. Yeah, I'd say I'm about 100%. We back. So let's see. Quick higher time frame recap. Oh, that's interesting, actually. Mm. Mm. No, let's see. Did we clear this high? Equal highs. Trying to analyze price here, really. Starting to move a little bit choppier. So we have a 15-minute volume imbalance right here. 10 minutes till it closes the 15-minute candle. So kind of a little bit until that gets confirmed open or not. 1 minute sense, right? Let's kind of follow order flow so far. So ever since coming down here, we left that as breakaway, kind of what we wanted to see. Retrace into all the discounts, expand back and forth, balance, expand up and through the balanced price range, leaving a new discount in the form of the fair value gap. We fully repriced into the low of the fair value gap, and we've closed back above it, hitting previous day high. So now I would say if we were going to run higher, this low here should be protected. So if we to get under that low, especially because it's also a fair value gap, at that point, we could possibly start targeting lows now. What's NQ doing? All-time high? That can't be right. All-time high? Like ever? Yeah, you're not wrong. See, I just don't trust it. I'm sorry. I don't know. I just do not, I don't know what it is. I don't trust that. The no B adjust. I mean, still obviously we do have higher time frame targets, right? So I like that daily. But I mean, that's interesting. I mean, yeah, that's literally 48.08 and a quarter all time high, opposed to 48. Nah, see, I don't trust that at all. I will remain be adjusted. Nice. Okay. We'll see if we want to keep expanding here. Close above that high again. In my opinion, Gino, right, straight opinion, that's really all it is. I've always kept it on. And I've even really said that that's where I differ from Michael, probably even. He's someone that changes the contracts. So he goes between the actual, like ESZ or ESH, whatever the monthly contract is. I personally keep it on ES1, the continuous. And right, not blindly, I've changed it before. I've kind of messed with it because I didn't know if it was something that would hinder me or not. And I've actually found that if I keep it on, I just am more precise that way. So I've never messed with it. Could be in my head, who knows? Oh well. We could. So now we're watching if we get continued expansion into. All right, let's go to a higher time frame. What else do we have over here? Okay, so before that actual high, take the midpoint of this. Actually, we could break that down fully. Wait though. Open of this candle is 4808 and a half. Remember that. 4808 and a half. 4808 and a half. Gotta be a better way, right? Okay, that's what we are. God damn. Chill up. Don't need to go way over there. 4808 and 1/2 of a point. So now we've kind of deconstructed, right? The anatomy of it just gives us kind of projections to aim for. I went long again. Here. Almost out. I mean, at this point, actually, I'll probably go break even. Like that. The fact that the wick's right there, I might go for that. No, we don't need to be greedy, right? First day back after a little bit, so we're chilling. As we said, right? We go back in. Once we create this low and then close back above, that's the confirmation for me. So I'm not certain if we want to hold the fair value gap. So I'm not comfortable going in on the fair value gap itself. Some people might. Right? For me, I like confirmation. We hold it, return perfectly into previous day high. Perfect. Perfect delivery. Perfectly holding the volume imbalance, the BPR, closing back above. And remember, this is the 15-minute volume imbalance. Let's go back. Right? So we're seeing how this is all coming together here. So as we kind of close back above this level, closing above the fair value gap, I'm going long as we come back into that fair value gap paired with the volume imbalance. Because at this point, we've held it, we've confirmed it as support, we've established a new area that I could place my stop, right? So this swing point is protected, which means I could put my stop there and cut risk. So now I'm comfortable entering, stop here. And as you saw, I get out at 5 handles. So I entered actually right on the 830 level here, inside of the fair value gap. Right, that's kind of what I was aiming for. So as we come into that, into there, got filled just a little bit higher, about a tick higher than it. Could have left on for that target. Should have, so we could have caught the swing high. Played myself. It's all right. Like, see, like, honestly, for me right now, I'm done for the day. Keeping it easy, keeping it simple. I do still think we can expand, but we've captured about 11 handles so far. Maybe we go for one more. But right, look at how we react there. Not random either. Really starting to put it. Wait, that's the 15, right? Am I tripping? 15. I don't know why it's not showing on the... Oh, okay, that's why. I was like, where's it at? So yeah, that was 15. That's beautiful, to be honest. I really notice how we're kind of meshing the time frames. That's such an important thing. You guys see me operate on the 1 minute a lot, but it's because I have a good understanding of what's happening on the higher time frames aligned with it. Right, whereas if we're kind of just following 1 minute price action, we're gonna get chopped up. That's just to be honest. A lot of my entries and things come at key higher time frame areas and levels. So at this point, right, if we're bullish, discounts hold us. So we really shouldn't, like, notice how there's no inefficiencies at all. Oh my, that's so beautiful. To that, to here to there. Sorry, this is pretty. But if we start expanding, notice there's no inefficiencies, right? Nothing, 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 nothing. Only one here. We've already repriced into it fully though and moved away. So to me, we really don't need to return really even into this. Like if we're bullish, this stays open and we continue to reach for maybe right like here and then here, here, ultimately here. If we overtake the 1 minute, I think we come back into the fair value gap. If that holds, I think we definitely go back for now. Because right, there's nothing here on a 2 minute besides that down close candle. So if on a 1 minute chart, we got underneath that level. I like returning into previous day high and then potentially lows. We're going to move that bullish breaker as of now. And the wick, don't really need that. That held nice. Don't need this. Oh, look at that. All right, so let's see. So we're back into it. I want to see if we get under it. We can kind of wick it. Close is important, right? If we wick, come up out here. But if we actually close that level, let's go to NQ absolutely. Oh, wrong chart. Interesting. Wow. Okay, hold up. So actually, I would like that. If we go, NQ wasn't even able to clear its high. So this high here in NQ, we haven't been able to clear that. We leave now a fair value gap. We've closed underneath. My attention goes back to lows now. I don't think I will engage. But I want to see if that fair value gap there gets left open. I'm kind of picturing though. We did leave that fair value gap there. So as we said, right, if we get underneath the fair value gap, we go back for the old daily high. I mean, that's perfect because there's a volume imbalance there. So that's what we're looking at. That's going to be a magnet. At this point, inside the original fair value gap, Under consequent encroachment this time, that's a good indication that we're getting through that fair value gap because we've already got underneath it and closed above it once. So if consequent encroachment gives way, basically to me, the fair value gap saying that is right. It's going to give way as well. We did have. Ooh, closing right on that level. So already, I kind of think we do want to go lower. We'll see if we want to come into this fair value gap or if we leave that first. So now we have a bearish fair value gap paired with our inversion level. We've held at that wick, rejected, got underneath. Take a look at the 2 minute, right? In a 2 minute sense, fair value gap potentially. We actually closed back inside that range too, which is interesting to me. So closing back inside this original buy side range makes me think we want to continue to dig back into that range. Let's see. Equilibrium looks to be about here at this volume imbalance. Oh, okay, we've actually hit it already. So back to into equilibrium with a range. So at this point, let's see. Gun to head, we're forced to pick bias. I think that we, with what NQ is showing, I think we hold and go lower into at least equal lows right here. Notice we created equal lows on the previous day low, high, sorry. So now we throw sell side there. Pair that with a volume imbalance that was never hit on the low end. Could be a magnet. Let's see what we get though. Go to a higher time frame quick. Right, because higher time frame wise, this is bullish. So we're really relying on lower time frame structure here. Because to me, like a 15-minute chart is bullish. Volume imbalance, we've held that. Down close candle seen as an OB. Never got back into the actual fair value gap though, however. Interesting. But don't really need to because look how that 5 minutes holding actually. Yeah, that's actually a little more bullish in my mind now. So lower time frame, bearish. As we said though, we can't get lost straight on lower time frames. So we have a, well, wait, as I just get lost right now. All right, there. So 5 minutes here. Where's that 15 at? The 15 is there. 5, 2. Okay, so 5 minute. 1 minute bearish. All right, so let's notice how we're kind of interacting here, okay? So as we create this inversion, we would expect that to offer us resistance. We immediately, though, the first time we come back into it, negate that. So now that to me becomes a reclaimed fair value gap. We did close that volume imbalance, but notice how we've opened with another one. So we close here, we open with another bullish volume imbalance, and we're actually hitting the high now of that fair value gap. We're going to move the 5 minute quickly. How long until the 5 minute closes? So we have 3 minutes. But seeing how the 1 minute has closed now back above, I think we actually go higher again. I think we give one more run higher, which means that we could use encroachment with the hidden volume imbalance. 5 minute. Might not get a entry. Do I like that? Do I like that? Let's see. Look at that. Here, I'll paper this one. Like I said, I don't want to actually go back in again. That's what we have this for. I'll give you something. No one enter it, you'll lose money. You will lose the trade if you enter this. Fair warning. Now it's muted. Twas muted. Twas muted. But I was just gonna say, for me, I don't really, because I trade with BHS on, right? I trust that I keep that on. I trust kind of in the data I've collected with it over the years. I would still target higher objectives. So I was showing you that daily chart, right? And I still have this daily high here, these daily highs up here, and up here. Until I'm proven otherwise on a daily chart, those are still my targets. But we'll go ahead and full pull this, and then we'll probably call it a morning, to be honest. That'll be 3 for 3. No need to overtrade. That shit rips and just stops us now. Shouldn't have said nothing. This is that quarter level of the wick. This is the 50% level of the wick. Remember, that's kind of what these levels are. So there's a 1 hour wick resting just basically aligned with the high. So the high of that wick is here. This is the low of it. And this is kind of the anatomy of it. Right? So the midway point in the quarter levels. Just makes it easier to kind of aim for something and we understand what's occurring, right? Like you could see here at that first entry into it. Hesitate first, get above it, find support. So now I'd expect kind of expansion into the quarter level and would like to see it a little bit higher to get us out at that 5 handle target we have. If we get above this high, I'll move my stop to break even because at that point, I don't want to get caught in kind of a fake run higher retracement to stop us out. So we'll just go break even. I can indeed, Jake. We'll go over that. Ugh. I'm not muted. I just haven't said nothing. You guys are traumatized too now, because I be talking all muted all the time. Uh, your cursor was talking instead. True. Just moving. Just looking at what I want to do. So I was just pulling up kind of the daily standard deviations. That's this level here, half standard deviation. Say we're in a bullish day, we want to get there. Midpoint of that wick will be hit as well. So I figured I'd give it a little more extended target. Partial still at 5 handles the majority of the position, but if we do want to expand a little bit more, we could let that run. And no, I've never looked at gold bach levels. I honestly couldn't tell you one thing about what that even means. I don't know if that's good or bad, but that's the truth. Goldbach. That's like, isn't that a bank? Or am I tripping? Whoa. Why did that cancel? Deep dive. Oh, okay, okay. I've never actually heard him talk about that, if I'm being honest. Are you sure that's ICT stuff? Could be, but I mean, I felt like I was pretty versed in it. Bruh. So it was that first quarter. Look at that reaction we're getting there. I got a whole lot of... Let's just see. Bruh. Nah, y'all saw that. Y'all saw that. That's crazy. We hit it though. Cool. There's one. At this point, we can get stopped. Could care less. Line share taken. We'll see if that 4 hour wick wants to get breached. If not, we're content with that high right there. That's all we need. I notice how we're starting to use this level now. So you see how these key areas, price will reference them. So the first time we hit that 4 hour, the inception of the wick, we reject, we get through it, use it as support. We start approaching the quarter level. Notice how we reject it the first time, get above it, potential use it as support to now send us into right that next quarter level, which is basically equilibrium, midpoint. And as I said, this here is a half standard deviation of the daily range, right? Average daily range. So if price wants to reach up into that, obviously it'll hit this, which is why that's our final target. If not, we get stopped in profit after securing profit. So we bank either way. Win-win scenario. Swing high. Taking you home. Oh, let's see. Let's see. Mm-mm-mm. Still going up. Choppy delivery up though. Like kind of methodical, but we still go. No, 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 no. Oh. Expanding nicely. Okay. We're just chilling here. A little more boring. As we mentioned, if we TP here or stop loss, really, regardless, that'll kind of be it for the day, for the morning. I might take one more actually right above this high. So I'm going to close one right there. Right at that high. Just in case. No need to fight for an extra handle. Right? And that's why we did that. Look at that. And real quick, just to mention, right, why was my stop here, not here at these lows? Well, these are equal lows. Right, this is obviously not. Remember, when I went to that 2 minute, this is the order block as well. So I'm looking at how, as we're moving higher, what discounts should hold us. This order block can be revisited a few times because we actually never got into the main threshold of it. If I show you that, I still haven't. Now, if we took the body of it actually as well, we have. But I'm saying that this is the discount I would want to hold. So that's why the stop is under that. So as we trade into that area, right, we're still protected. That holds us. But now that we've actually got a return into that and a move away, now we can move it to whatever swing low was created. All right, so at this point, it's right under this swing low. Even though we haven't broken structure, that's still fine because we have a fair value gap now. So if we get through that fair value gap through this low, I don't want to be in this trade anymore. As you see, we're starting to range a little bit. So we'll see if we get one more stab up. If we catch all three swing highs, that would be mwah, chef's kiss. We'll see. If we have a fair value gap plus volume imbalance side by side, you can combine them to one box. I draw them separately personally. So I'm guessing you're talking about something like, okay, so there we go, stopped out. Fine with us. Well, we closed basically all the position already. That was one last contract, so stopped on the remaining balance. But yeah, volume imbalance and fair value gap are side by side. I tend to draw them separately just because I like to differentiate. Trying to find an example of one from today. Let's see. We only formed one today, though, do we? There you go. Yeah, I'm not seeing one. Damn. Whenever one forms, I'll show you. Let's see. Oh, yeah, here we go. So fair value. Okay, this is different. I lied actually. But either way, because this one never actually came back into that candle, so it'd be a little different. If it's like this, I'll combine them. But either way, usually I'll just have like the volume imbalance labeled like this, with then the fair value gap labeled underneath it, like that. That's kind of the standard. But there we go. So we get stopped, returning back lower. Right, would have taken our original stop as well, so we like to get stopped a little sooner. But overall, not bad, right? This trade, so we'll kind of speak about this one. We were looking for higher prices, price to continue to expand. We create equal highs first. So we engineer buy side, we retrace into a discount. We hold this discount, and now on the way up, we're overtaking short-term premiums, right? So we were looking at this 1 minute bearish fair value gap. So now there's a 1 minute bearish fair value gap here, and we had a 5 minute actual fair value gap. So we don't want to get lost on what's happening, right? The 1 minute's going lower, but as we overtake now the 1 minute bearish fair value gap, the 5 minute chart is wicking, right? So the 5 minute candle body is still holding the actual 5 minute fair value gap here. And I'll actually go to the chart and show you that. Right, so this is the 1 minute wick lower, but notice how the 5 minute counter body holds the actual 5 minute. So when we see that, right, we can expect price will continue to print higher. So when we now close above the 5 minute and the 1 minute bearish fair value gap here on this candle, we're fully confident to trust this fair value gap will act as an inversion level, especially because it's paired with our 5 minute. So we go along right on that, as we mentioned, stopped under this candle because we don't expect this to be returned into. That's a breakaway gap. We catch the swing low, we exit on the swing high, and we exit on another swing high. So nice trade there. We'll talk about the actual ones we took as well. Let me change the screen for y'all. Maybe. Is it this one? Okay. So now here, I'm going to remove the wick quickly. Don't really need that. But now for us, this morning, okay, first entry we're looking at how we have really created, I'm looking at this YouTube model. Short-term low cleared, we break structure. This is the original kind of framework that we're trading within for the morning. That's what I'm looking at, like this. So I'll drag that out. So now as we trade lower, right, we're looking at 9:30. We wanted to see if we do to swing lower before running higher, because we're still looking for this buy side objective. Instead, we create the equal lows, and then we break. We mentioned equal lows don't need to be targeted, and especially because NQ ran this low. So now we have SMT, price breaks higher, breaking through, right, all this mess in here. So we had bearish breakers that get broken. And as we start trading higher, we're creating new discounts. Right? So the premiums in here that we're breaking through become discounts. We were really looking at this. This is where our attention was drawn to, because it's inside a bearish fair value gap, and it's the volume imbalance that doesn't ever get retraded into. Right? So when this candle opens, there's no attempt to go lower. So that's a full gap there. So that's going to be important, and we see how price continues to use it. As we wick it the first time, retrace. When we get through that wick, as we mentioned, wicks become gaps. So now we have the YouTube model forming. I'm looking at this wick here as a gap inside of that. So we're getting a little advanced, right? This gap, consequent encroachment, aligns with the volume imbalance. But besides that, low, high, to the lowest low that gets broken, these consecutive up close candles are a breaker. Well, when we drag that breaker out, look what's happening. So now, the volume imbalance, already a key area, consequent encroachment of the breaker perfectly equals the volume imbalance. Consequent encroachment of the wick perfectly equals that, right? So you're seeing how all these areas are becoming the same exact level. Old sell side pool as well. So I can continue to stack the discounts here. So that's why as we trade back into that discount, we go long. Right, it's paired with a fair value gap as well. So a lot of things in here that suggest higher prices. This breaker here should not be broken, which is why we were saying this fair value gap becomes a breakaway gap. We never return into that. Once we hold that, we accelerate higher, return into the fair value gap one more time, and then deliver into our first buy side pool. So that was really our first target, right? That first buy side pool. We hit that buy side pool. Clip some of this. So after hitting this buy side pool, we wanted to see if we would continue to expand or retrace back into the range. Well, how did we do that, right? We look at the most recently formed discount as we trade into that buy side, especially because we close above. That's this fair value gap. As we return into that fair value gap, we hold now the volume imbalance within there, hold the low of that fair value gap, tapping previous day high perfectly, closing now back above the fair value gap. This candle, once we close back above the fair value gap, that means this is balanced. So if we truly are bullish, that fair value gap should not break, which means this swing low here is protected. So now we go in with the second entry, right on that fair value gap, stop under the low, just targeting another 5 handles. And we got out right at the high of this candle here. Next, we actually had a little better entry. We got in about right, where was it? Yeah, right there. So catching the high, missed the swing high by 1 tick, unfortunate. But all in all, right, you see the framework of that. This is also a 15-minute volume imbalance. So once again, just like this trade, where we at? Oh, sorry, the paper trade. Just like this trade, how we're using a higher time frame PD array aligned with the lower time frame. That's what we're doing here. Right, this is a 1 minute fair value gap we're using, but it's aligned with the 15-minute volume imbalance level, which is why we trust that an area like that will hold us as we accelerate. And as you saw, right, we took that entry. Didn't take that one here on our account, just papered that. Logic still there though. So catching the low up into the high. And now we've just been consolidating around that level. But yeah, that's our morning. So overall, good morning. 3 for 3 theoretically. Going forward, I mean, I still like higher prices, to be honest. So I'll just look for continued expansion, really. I would look for, so let's go to the 5 minute quickly. So this 5 minute paired with this 1 minute inversion. This would be the area I would see if we return into here. This is kind of my flip point, right? So if we can come into here and offer us some type of short-term buy setup, target the buy side. If we get back underneath this, especially underneath this 1 minute here, if we were to close underneath that, I think we come back for equal lows here and then potentially right unfilled inefficiencies at that point. So those are two scenarios where I would favor to see a buy setup. So don't want to be too ambiguous, but I favor that we continue to run higher, but we always have to have if and then statements. So if we do get underneath that fair value gap, we know to switch our bias at that point and start looking for a lower delivery. Yeah, that'll be all for today. Let me see what we have tomorrow as far as news. Home sales, 8 o'clock, 8 o'clock. Okay. So high impact news, 10 Eastern tomorrow. So tomorrow we'll get on about 9:55. So a little after equities open, we'll let that play out. And we'll come back for the high impact news at 10 o'clock. Until then, if we don't have any questions, we'll give it 1 sec. Cool. So yeah, if we don't have any questions, we'll call that a day. And we'll meet up again tomorrow morning. So until then, everybody, have a good day, be safe, and we'll talk tomorrow at 9:55 Eastern. See you guys then.